Welcome to EV Hub Live. EV Hub Live is a brand new podcast for public policy professionals working to advance transportation electrification. EV Hub Live is recorded live, so to tune in and ask questions or check the schedule, please visit atlasevhub.com/live. Your host, Nick Nigro, founder of Atlas Public Policy, will be talking to Britta Gross from the Rocky Mountain Institute and David Ferris from E&E News about recent developments in the EV market, namely passenger vehicle sales, policy developments, and electrical utility activity, as well as how COVID-19 is affecting the EV market.
Thanks again, Peter, and welcome to episode 2 of EV Hub Live. First, I just want to apologize to those who are listening to us live. We lost our guests due to a technical snafu with Microsoft, and they're joined us by phone, so no worries. The show will go on, but we won't be able to see their pretty faces. So I'm Nick Nigro. Today we are going to talk with you all about developments in the marketplace. Every quarter on EV Hub, we summarize what's going on in the market with a slide deck, and that's going to serve as a backdrop for a lot of the information that we're going to be talking about today. Very excited to have our two guests, David Ferris from E&E News and Britta Gross from RMI. These are two very well-known entities in our space, and we're really looking forward to the conversation. So without further ado, first, let me show you a little bit of the data on what's going on in the marketplace, particularly the electric vehicle sales, because as most of you know, sales are down in 2020 versus 2019. That is not an issue unique to electric vehicles due to the global pandemic. Q2 sales were down, in fact, 44% as a result of the pandemic year over year. That is a little bit lower than the conventional vehicle market overall, but there's really no evidence from our standpoint that the decline for EVs is more than conventional vehicles for any particular reason. So with that as a starting point, I just want to get our guests in here and get their thoughts on where they see EVs are right now and some of the effects of COVID-19. So Britta, do you want to give us your take first?
Sure. Hi, everybody. Hope everyone can hear me just fine on the phone.
Yes.
Yeah, I guess, in a way, maybe David could lead off on this thing, but let me just start a couple thoughts here. I think that when we look at what's happening in the market, we all understand this is a very unusual market right now. I do tend to think a lot longer term and focus instead on more where we have to get by 2030 in the next 10 years. We're slowly creeping on to 9 years here, relative to the kind of adoption we need to see. But I think when we're in these kinds of markets where there's a sudden downturn, it reminds me of 2008 and 9 when the market also took a turn for the worse during the recession. And in those time frames, I recall that the average new vehicle retail price going into the recession was close to like $38,000 back then, and coming out, right in the thick of things in the 2009-10 timeframe, the willingness of consumers to pay for a vehicle dropped to like $31,000. So I expect that kind of thing is going to happen here as we deal with probably a recession here the longer this lasts. So I think that those are certainly things that can have an impact on all new vehicle purchases, in addition to EVs. I think now's the time to actually go out there and really talk about total cost of ownership and what it means to be driving on electricity and the kind of savings you'll experience driving on electricity. So I think that's important. The other thing that comes instantly to mind, of course, as all of us are working from our living rooms, dining rooms, and bedrooms, is that the VMT reduction is also equally critical in the next 10 years. And so we are sort of experiencing what we've looked at as about a 40% VMT reduction through the course of just even the month of March, from the pre-COVID for sure, and towards the end of that month, and accounting for some job loss as well, conservatively taking that into consideration. The real, the work from home reduction, it was about 40% over the course of March. And so, if we look at, my goals would suggest from Rocky Mountain Institute that by 2030, we need to really hang on to a 30% reduction in vehicle miles traveled, and we need to hang on to about 20% adoption. We have to get to a 20% adoption of electric vehicles in the next 10 years. So, we are where we are right now, but let's hold on to some of the things that we're experiencing in this new normal that actually can work for us and may work even better for all of us, like the VMT reductions and working from home, at least some of the time. But then also the EV, I try not to get too excited about it. It could take a couple of years to spring back. But again, TCO and total cost of ownership of these EVs is a really important talking point right now, and not jumping right back into gasoline and new vehicle purchases. But we can talk more about that a little later. But thanks, happy to be here today.
Great, thanks, Britta. David, you've been covering this issue for E&E News, and which is a great trade pub. If you all don't read it, I highly recommend it. What is the industry talking about? What are people talking about? What do people care about when it comes to the market right now? What are you seeing, and what stories are most impactful right now for your readers in this topic in particular on sales?
Sure, Nick. And hello, everyone. I'm really glad I could join this podcast today. And if anyone's having any trouble hearing me, of course, just let me know. I think the thing that the big concern that people had earlier in the COVID pandemic, that EV sale, that the economic crash was going to cause automakers to turn away from their ambitious electric plans, has receded a bit. It seems like most of the automakers are still invested and still moving forward with their EV plans. And so even though there's been a drop in sales, it seems like the automakers haven't backed away. And so I think that's one of the big takeaways from the COVID pandemic so far. And it's so interesting in terms of what just the chart you showed about EV sales. You can't help but notice that how much of that chart is pink or salmon colored to represent Tesla, and that this is still a story that's very much being driven by Tesla, even as the traditional automakers make big plans, and even as a lot of other startups start to move in. And so obviously, anyone who reads headlines sees that Tesla is on a tear right now, and its stock price just keeps going up. Just recently, it had a 5-way stock split, and it's just continued to ascend to levels that put it out of the league of any other global automaker, even though it's just a tiny little player in the number of vehicles it actually produces. And along with that has come this market exuberance for other new EV makers. It seems like investors don't want to miss out on the next Tesla, and so are piling their dollars into Nikola, the automaker based out of Arizona, and to Chinese electric automakers, and into Fisker. And it is a heartening development to see all that money rolling into new automakers that are obviously going to need it if they're going to actually build auto companies that can compete with the incumbents. But at the same time, Tesla is always a wild ride. Tesla is always a roller coaster, and there's the risk that a downturn for Tesla would be the similar roller coaster downward for those automakers as well. And I have other thoughts, but I'll stop there, and we can revisit other things later in the program.
So I want to switch gears or at least dive into that investment issue a little bit more. And I'm going to turn the floor over to Connor at Atlas, who's got some thoughts and some data to share with people from the information we collected for Q2.
Hi all, happy to be here and to share some of our thoughts with you all on this investment piece. And David brought up a lot of really good points there, and are all things that we're tracking ourselves as well. And we have definitely seen an increase in investment, especially from the startup sector, as David was mentioning, towards the end of Q2 and into the early stages of Q3 as well. In particular, we've seen a large investment from an electric startup called Hillian that's doing trucks. That was the largest investment recorded in Q2, and it was worth around 560 million. And this is all part of this wave of startups that's looking to enter the market and offer their stocks to raise investment and kickstart their production. And we've seen kind of a fleet of these EV startups and larger EV companies as well entering the market in the last several months, with companies like Lordstown Motors making their debut electric pickup truck, looking to enter the market in the next couple of months, as well as companies like Nikola, which has already done it, and several Chinese automakers like Li Auto and XPeng as well. So that's kind of one of the wider trends that we're tracking. And David already brought up the hot news button of the Tesla stock prices and that generating lots of excitement across the industry as well. I think that pretty much covers most of what we've seen on the investment piece over the last couple of months.
Thanks, Connor. And yeah, I just have to say the amount of money that's been announced as investments into transportation electrification is just incredible. And a lot of it is for existing companies that are working in the transportation sector, the Volkswagens, the Hyundais, the General Motors, et cetera. But I do think the startups tend to get an outsized amount of attention in the media. And so, my question to Britta and to David. Oh, it looks like we might have lost Britta. Let me try to get her back. We'll start with you, David, while we get Britta back on. It seems like Tesla and the other startups, to some extent, get the upside when it comes to their announcements, as I was kind of mentioning. And so, what are your thoughts about that, and why the coverage for these startups tends to be more rosy? We'll start with David, and then Britta. Sounds like you're back on, and we'll turn to you afterwards.
Sure thing. Well, it's just going to be such a long time before we see any vehicles from these new automakers, and I think one of the things that investors maybe lose sight of when they take a look at these other automakers is just how singular and rare Tesla's success has been, and how long it's taken them to become start to become a major player in the auto industry. And we have no idea whether these younger also-rans are going to be able to make the transition to actually being major automakers. And before Tesla came along, it had been many decades before any aspiring auto company had actually made it to scale. So it's a daunting task in front of these companies. And if we have Britta back online, I'd actually like to hear her thoughts on this question, and we can bat it back and forth.
Yeah. Thanks. Can you guys hear me fine?
Yep.
I'm assuming you do. Yeah. Sorry about that. Boy, we're having a lot of technical difficulties everywhere right now. I think this is a really fabulously important point, and I totally agree that what Tesla's accomplished is a lot harder than folks think. I think there are a lot of investors and analysts that are very friendly to startups. They don't have they're not carrying a lot of 100-year-old baggage, 50-year-old baggage from the other automakers, and there's a lot of leeway to try to raise capital and investment that way. So, but I think, as David said very accurately, we all think these guys can deliver, right? So I actually tallied up. Car and Driver had a nice article last November about the new models coming out in the next 2 years, new EV models, especially when we talk about vans, pickups, SUVs, and some of the larger CUVs. And in that article, you start to add up how many startups there are, and there are a lot of them. So we'll see how they do. Some of them almost certainly will be successful. We'll have to see. The dilemma for the established automakers is, the markets and the analysts are just not very friendly, and they're much less forgiving regarding losses. And these guys can't just go to the market and say, hey, let me try to raise $2 billion from a bunch of investors. So it's just a very different place. So what I see is that the established automakers have all sort of step back in the last, let's say, 3 years. They are preparing new products, just as the new startups are. They're preparing new products, but they're also prioritizing profitability because consumer demand, or the certainty of consumer demand, is just still not there. We don't have a national, target. We don't have sort of the strategy, the vision here in the U.S. And so I think the automakers are seeing this and going, we're just not sure the demand is really there. And so let's, in the meantime, put products out there that people are, number one, asking for, but also will drive profitability. So you'll see a lot of Cadillacs, or the higher end, the higher end pickup trucks, and even the larger SUVs. Those are coming to market, and I think you can trust the OEMs when they put a date on the calendar. They will likely make those dates. And so I think that's kind of what you're seeing. And unfortunately, it means for that mass market, the vehicles, like the EVs, I'd love to see down in the $22,000, $25,000 range. I think that's still just a little bit out of reach, as the automakers have to continue profitability. They have to figure out a way to make some kind of money in the next 5 years. I think by the time we get to the end of this decade, 2030, I think you are starting to see them batteries that have pulled out either all the cobalt, or as 70%, as much as you possibly can, and they're really going to be starting to tweak that engineering and refine the cost of those batteries so that it is closer to par. I don't know when we see $20,000 cars like EVs, at full market, at the full cost to produce these vehicles.
David, what are your thoughts there?
Actually, I don't know if I have any other thoughts on this particular topic. Would you like to talk about Battery Day, Tesla's Battery Day coming up?
Sure. So for everyone who's not aware, Tesla is having a Battery Day, and that is this month now that we're in September. And it's a lot of speculation about what's going to be announced in terms of the cost per kilowatt hour of the batteries that they're going to be able to produce, the longevity of those batteries. A lot of rumors are flying around. David, what are you hearing, and how do you feel like that might have implications on the broader EV market?
Well, at first, I think it's astonishing and heartening that something called Battery Day can be so well known to so many people and to be an anticipated event. I think it shows that batteries themselves are starting to take a more prominent role in the public imagination in a way that's going to help the whole EV market and, frankly, the whole clean energy market grow. So that's one important fact about Battery Day. And we don't know what we're going to hear on Battery Day. We've heard about Elon Musk has hinted at a 1 million-mile battery, meaning a battery that could carry a car for 1 million miles. We've heard about a more dense battery. We've heard about batteries that have less cobalt in them, and we simply don't know what all is going to be revealed that day. But likely, it is going to be something that's going to change the value proposition for EVs over time. It's either going to be something that's going to make the battery cheaper and more dense, both of which means that the car can either be cheaper or can go farther, both of which makes it a more appealing option for drivers. And the really intriguing and kind of mind-bending one is the 1 million-mile battery claim. Because if a battery can truly go 1 million miles, that means that the battery outlasts the car, because no one makes cars that can go 1 million miles. And so then you are confronted with the possibility of what happens to a car that doesn't die, that just kind of goes on for sort of not quite eternity, but for a very long time. How does that change how people conceive of cars? How does it change how people use their vehicles? And what happens to that battery if the car around it falls apart? And all of those are tantalizing questions that have impacts for what a car means and what role an electric auto can play on the electric grid.
Britta, I'm wondering if you could chime in a little bit about, Rocky Mountain Institute's a formative research institution, and I wonder if you might talk a little bit about some of the research you all are doing on future mobility options, that sort of services. You mentioned VMT reductions and the importance of that earlier in the show. Could you kind of link that to some of the potential implications that David's talking about regarding battery day and what it might mean for improved mobility services?
Yeah, sure. I do think this is a big turning point. And I think that when we've been watching, you watch the automakers, and I saw on one of your slides there that the big three automakers have only 5 EV products on the road. That's this is the stepping back, looking at where's the demand coming from. Is it really there? When will it be there? Do we have time to sort of get cost out of these products? Because until then, all we do is incur more losses for every vehicle we sell. So the automakers are really pulling back and going to deliver these products, like I said before, that are going to try to be as profitable as they, try to drive for at least parity, if not some profitability, while they continue to pull out the cost. So Tesla and GM have both talked about, GM has announced a battery that's available. I think it was announced early this spring, I think in early March, that by the end of the year was going to be 70% less cobalt. These two things are really important. They also followed up at GM with a similar, when Tesla came out with its news of the million miler, I think GM followed up and said, yeah, we're very close to 600 mile and 1 million miles of life on the battery. So I think what you're starting to see is startup and established automakers, and the automakers have been and the battery makers, in partnership with a lot of battery makers, they've been busy in the background while all of us sort of watch and survey the market and buy these EVs. Those guys are back there they see the writing on the wall. They know that in 2025, 28, 2030, 2040, the writing's on the wall. We're going to have to go all electric. And climate analysis that we've done at RMI suggests the same thing. We are going to have to get to 20% of an electrified car park by 2030. 20% of all electric vehicles, that's 1 in 5 vehicles by 2030, need to be electric to have a dent and to make any kind of a dent in climate temperature increase in transportation. Of course, that's the #1 sector of greenhouse gas emissions in the United States. So this becomes a very, very important lever. In fact, if we don't do enough on the VMT side, if we don't achieve 30% reduction on the VMT, then you have to do more electrification or vice versa. These are it's a balancing act. Like, what are sort of the most reasonable shares of these parts of the market to address sort of the emissions that are coming out of transportation? If you can get to a 1 million mile battery, of course, it changes the math. I mean, one of the reasons why consumers say they don't, at least earlier on, weren't buying EVs, they've got concerned about a new technology. They're wondering about the life of the battery. Gee, will these things survive? And what you're now seeing with this news is, why in the world would you think about going and buying a gas vehicle if, in fact, the one thing you felt most confident in was the longevity of that gasoline combustion engine? If that now becomes completely not as compelling as a 1 million mile battery. So now you have this issue of depreciation of an EV, or the residual value, increased residual value of these EVs. It's got value. It's got a lot of value at its end of life, whatever that means to you. It might mean 3 years in your household, or it might mean 10 years down the road, or the U.S. average of 12 years is the lifetime of a normal vehicle on the road. Or it now opens up this entire space of secondary use of batteries, because even the utilities were asking. I'm kind of interested in dipping into these batteries on the EVs, but maybe by the time it's done with road use, there's not much life left in this thing. Well, that changes that math. And now they have an entire lifetime, maybe tens of years, 10, 20, 30 years on the ground in a much kinder, gentler, ambient environment in a at the base of a wind tower, a wind turbine, or in a solar power farm. So I think this opens up it just changes the economics instantly if these things become real here quite soon.
Britta, you introduced a key player in EVs, particularly in the infrastructure side of things, the utility, in terms of potentially taking advantage of these second life batteries. I want to bring in Nicole from Atlas to tell us a little bit more about what's going on with the utilities, because I think we need to spend some time here talking about infrastructure and how that's progressing or not. And so let me turn it over to Nicole to give an update on what's going on from the utility side of things from Q2 and a little bit afterwards.
Hey, thanks, Nick. Happy to be here. So utility activity in EVs is strong even amidst the pandemic, with 2 substantial investments approved in New York and California since the beginning of social distancing. In New York, the commission approved more than $700 million of investments in EVs. The order was issued in July, and it approved 6 of the state's investor-owned utilities to invest in make-ready infrastructure for light-duty public charging stations. The order also includes make-ready investments for medium and heavy-duty fleets and transit vehicles. 20% of the utilities' make-ready budgets is allocated to environmental justice or lower moderate income communities. Also in California last week, the commission approved Southern California Edison's Charge Ready 2 program. It's a more than $430 million program, making it the largest single EV utility program approved in the United States. It includes both make-ready investments, and for multi-unit dwellings, it includes turnkey solutions where SE would own and operate the charging stations. 50% of the make-ready investments and 100% of the turnkey solutions will be deployed in disadvantaged communities. Utilities have also been proposing new investments amidst the pandemic, with more than $300 million in new EV investments proposed since April. This includes new filings by 5 different utilities in 5 different states, and it could support about 600 new DC fast charging stations and more than 40,000 new level 2 charging stations. Some utilities are including transportation electrification in their response to the pandemic. Xcel Energy in Minnesota proposed more than $150 million of investment in transportation electrification as part of a COVID-19 recovery plan. Notably, the proposal includes rebates for vehicles, including transit buses and passenger vehicles. The rebates are tied to participation in a managed charging program. The proposal also includes public DC fast charging stations that would be owned by Xcel, as well as accelerated electrification plans for Xcel's own vehicle fleet.
Thanks, Nicole. So utility infrastructure is well over $2 billion now of approved investments from just the investor-owned utilities in the United States. Huge amount of money towards infrastructure. I wonder if we could ask David and Britta, what are you all thinking about where this is going and the importance of this engagement from the utility sector, the power sector, on the infrastructure market, and how is that role of the utility evolving? I mean, the order just from California last week is over $400 million. I believe that's a record in terms of the amount of money that's been approved. So, and that role is pretty substantial relative to what utilities were doing earlier in this market when they were doing, relatively small pilot projects. Britta, why don't we start with you? Because I know you spent a lot of time thinking about this.
Yeah, I mean, just a couple other things that I'm really, really excited about, in addition to all the things you guys have just mentioned. What's even cooler in California is, I think yesterday, AB 841 got approved, and I got to dig into it in more detail, but that sounds to me like the right to charge policy that the Netherlands has in place, where if you put your hand in the air, you're a homeowner, an apartment renter, you're your workplace, etc., and you have an EV, it needs to be charged, the utility is required to go in and at least wire the premises for EV charging. Now, someone else, the homeowner or whatever, has to pay for the charger, for example, but this interconnect gets taken care of. And for me, this is a huge enabler, and I'd like to see that spread across all 50 states, and maybe even think about that as well. I guess it's hard to imagine a federal policy that can take care of that. But with California, again, this AB 841 yesterday that got passed, I would call that the right to charge interconnect bill. And I think that might be the most interesting thing I've heard in 5 years. The other thing that's interesting is Xcel Energy. You mentioned Xcel in Minnesota, but Xcel Energy in Colorado just had a month ago or so had an announcement where they actually have taken this 20% figure that's really important. It's 20% of the entire vehicle park, on the road vehicle park, needs to be electrified by 2030 to address, to begin to chip away at climate temperatures. They've taken that 20%, calculated what it means for in their service territory in Colorado, and that's how they based the size of their program and the kind of programs they were going to deploy in the state of Colorado to make sure that it is in line with a 20% electrification of all the vehicles in their service territory by 2030. So for me, folks are starting to understand the big strategy, the kind of things that have to happen, and moving away from we need a couple more stations, we need a little bit more funding into strategically, where are we trying to get? And I think that's what sort of sets apart, some of these utilities, some of these states from sort of this lack of, we sort of have this lack of national vision. We've got to either put it, paste it together, in a patchwork form, or sort of try to spread the messaging and the targets out, and then we all begin to sort of adopt to them, because then you have a strategy that will live, it'll breathe, and we can actually make some things happen here in the next 10 years. Those two things for me jump out as being very visionary in both cases.
So speaking of visionary, bringing it back a little bit to the vehicle and side of things, but also related to infrastructure. Another big announcement that happened just recently was General Motors and their partnership with EVgo. While it's probably too soon to tell exactly how that's going to play out, it did certainly make a lot of waves when it hit the news cycle a little bit ago. David, could you catch us up on that and what your take was?
Sure thing. So GM and EVgo, GM, the country's largest automaker, and EVgo, which is the country's largest fast charging network, said they would work together to build a network of 2,700 fast charging points or stations in, I think it was 40 different metro areas around the country. And both companies are being pretty cagey about where those are going to be located and how much money they're putting toward it. But it was the largest announcement by a major U.S. automaker to involve itself in EV charging, and which is necessary. And we all know that Tesla realized early on that it would need to have a charging network in order to enable electric cars. And this is a sign that GM has started to take it with the same level of seriousness. However, since we're not clear how much money EVgo or GM are willing to spend, it might be simply lending a brand name in the hopes that utility ratepayer dollars and that government dollars will actually help build that network. So it's a little bit unclear how muscular and how willing to act without help GM and EVgo are on those announcements. But it is an encouraging sign.
Britta, do you have any thoughts you want to share on that announcement?
Well, I don't have any inside scoop here, but I guess I would just say I view this much more as a collaboration instead of a partnership. I think when an automaker or anyone else uses the word partnership, it has legal ramifications. So I think I did go back and look at the announcement, the press release, to make sure I didn't see the word partnership in there. That would tell me one thing. I view it as a collaboration, and I think that what is really, really important here, again, the automakers are saddled with an awful lot of the costs already. The loss on the vehicles, the cost of the batteries, the market's not bearing the price that these vehicles will bear, and we can point to many, many different reasons. But I think that driving confidence into the market is really, really important. And I think that it's what you see, in Norway, it's what you see in China. This is what you do when you want this to work, and not always on the backs of certain sectors or whatever. You want to send signals that say, this is the direction, this is where we're going to get by 2030, 2040, or 2050, and you want to drive investors into these markets. So whereas I would sort of look at between 2010 and 2019, the way I look at the numbers, about 13% of all the investment in the EV infrastructure, including all of Tesla's investment, about 13% of all the investment in infrastructure, public infrastructure, in those 9 years, 2010 to 2019, came from private investment. 50% came from government programs, federal, settlements, state, local governments, and 37%, if that's the remainder, came from utilities. So the utility investment is really, really, really critical. But to get to real scale in this market, you need utilities and You need the private investment showing up, which means we got to find ways to make the market profitable on a, maybe not a per station basis, but per network basis. What makes all the stations or all the revenue coming from charging in the state of Colorado or Minnesota or Iowa or whatever, what makes that profitable for investors? So I think that when I look at GM and EVgo's announcement, I look at another sign that folks are trying to step up, collaborate to drive. This is the vision. This is where we need to get. Yeah, there were some words about we're going to find more partners for funding, and the utilities can do their part. I think it's, again, sending signals, because we just don't have them from on high. We don't have the national signals we want. People trying to do their part to piece this together. So I feel it's all positive. I'm not going to sweat the details on where the dollars are going. I think that EVgo investors ought to look at that and understand, that this is a confidence driving initiative.
All right. Well, I'm going to say something that's very typical in TV. We're going to have to leave it there. We're about out of time. So I just want to first thank my guests, David Ferris from E&E News and Britta Gross from the Rocky Mountain Institute, and the other staff at Atlas who helped me pull this off, Nicole, Connor, and Peter. Thank you all for joining our second episode of EV Hub Live. You'll be able to download it on your favorite podcast mediums or watch us on YouTube shortly. Stay tuned. We're going to do another episode likely later this month. And thanks again, and take care.